What up, players, traders, and haters? Welcome back to the channel. It's your boy D, right? It's your boy, and we are gonna talk about our green day in the stock market, right? So finally, our stocks, AMC, GME, and a bunch of other stocks, right, had a nice green day. AMC at 10% at one point, right? GME at 9% in the green at one point, and over $100, right? It's at $134 right now. GME currently, right? So good to see that. Like I said, I believed that the MOAS is AMC and GameStop because it's the same mission. We have the same setup basically, right? Highly shorted stocks. So I believe they will squeeze at the same damn time, right? And I'm not a financial advisor. This is not financial advice, right? So please don't take it as that. Take it for educational and entertainment purposes only, right? So yeah, thank you guys. Shout out to subscribers like always, guys, right? We got this shit. We're going to hang in there, right? Because literally, I don't curse too much, but the shorts are fucked, right? And we're gonna talk about it because Jerome Powell today, right? He put some information out there that I think is positive for the meme stocks, right? For any highly shorted stock, because he basically is saying that they're gonna keep pushing with their interest rates and their hikes, and this is gonna make the short sellers' positions more expensive. And in my opinion, that's what's gonna make them pay for what they did, for highly shorting these stocks, right? To where they were trying to drive them out of business and so on, right? So before we use too much time, that's the intro. Let's get into the info. Let's get into this right video. So I'll switch it up for you guys. Yeah, we're just gonna jump right into this part right here with Jerome Powell, right? And I found a nice little summary today. So he's Powell Fed to keep hiking rates until it controls inflation, right? And so he was saying on Tuesday today, right? Underscored the Federal Reserve's determination to keep raising interest rates until it has brought inflation under control. A high stakes effort that carries the risk causing an eventual recession, right? So they're acknowledging that, we are going to have to go through a recession. Now, there's no period of time of like how long a recession lasts, right? But it's in the cards right now. The Fed's increasing on its benchmark short-term rate typically lead in turn to higher borrowing costs for consumers and businesses, including mortgages, auto loans, and credit cards. The economy usually slows as a result. And yes, he did say that, it's part of it that he understands that the economy is going to slow down. What we need to see is that inflation coming down in a clear and convincing way. Powell said in remarks to the Wall Street Journal conference, and we're going to keep pushing until we see that, right? So that means they're ready to keep raising the interest rates as we go towards the end of the year. So, in my opinion, the MOAS will happen before the end of the year, right? There's a lot of data and signs that point to that. And Powell's remarks Tuesday followed other statements he has made that have made clear that the Fed is implementing a series of rate hikes that could amount to the fastest tightening of credit in more than 30 years, guys, right? So they're taking action now. They got a plan and they're sticking to it, right? So I think that's why the market liked what he had to say. Okay, so let's jump into the AMC chart, guys. What I'm tracking right now, right, is this downtrend that we've been in ever since we got rejected at 34, 35 here. And in my opinion, it finally broke here, right? So you see a green candle, but we need to see, in order to reverse, it needs to be like 3 or 4 green days, right? So that's what's bullish. The super indicator, and this is the daily chart, so the super indicator is going to turn green here soon, I think, because the downtrend seems to be coming to an end. Now, nothing's guaranteed. Could keep going down, but who knows? We'll have to wait and see. Now, what I have always liked is this setup, right? When you pay attention to this pattern right here, and then now we're moving back up. We're going to go back to always, like always, to this section here that we compare it to. And if this piece wasn't here right now, right? This is from the past. It looks identical to this. And then you get the one green day, right? So we'll have to wait and see if it plays out in a similar pattern, right? Because I believe the algorithms just slowed. There wasn't even a lot of volume. So there was only 37 million volume on AMC today, right? So we're going to go back. So that's what I'm paying attention to on the chart, right? So let's move on. Because all we have is this. We need confirmation, and we need to get above this 1350 level, right, to start to see a breakout. RSI is good. MACD's crossing, right, after this long trend, right? So let's see what we have in the cards. And I remember this could be a fake out like last time Jerome spoke. There was a huge run up, and the next day the market's pretty much crashed, right? So just keep an eye on that. And then again, right, we always have proof that the ink is out, right? 0 shares left to borrow, 0 again, over and over, right? So maybe Jerome Powell has said, no more ink, guys. We're not printing anymore. Synthetics, Guatemalans, fake shares, right? You know what they do. So currently 27,000 calls in the money. It's only Tuesday, but things could get interesting, right? As always. We're gonna go down again. 0 shares doesn't show the fee because they ran out of shares. We'll see how much pop up overnight. If it stays at 0, then we're looking good, right, for the next few trading days. AMC's at 12.95 right now, trying to bust 13 after hours, right? So this is what I was saying yesterday. Just a ton of potential for the calls, right? There's just this thing could get nasty if we start to see a push. 15, 16 to $17, right? That the options are loaded. And then again, this has not happened, not like this, where they're only shorting 42% or what the go down, watch. 60s, guys. It's always in the 60s. They probably can't keep control of all the highly shorted stocks now, right? So they're having less, liquidity to short with, right? So that's good for us, the apes, right? For our play. We got to talk about this. So CEO Adam confirms retail owns 90% of AMC. Toots now own 37%. We're sitting at a minimum of 130% confirmed ownership. After June 2nd, when the share price was around 70, Toots and retail net bought 130 million more shares, which is 25% of the entire shares outstanding, right? So even as the price has dropped, this is the line for the price for AMC. You can see that the institutions have been loading up, right? All the way until now, basically, right? December, yeah. So they know what's coming, right? We've been talking about it, pointed out in yesterday's video too. And let's go over to this article, right? So what's the probability of AMC squeezing in June? I'm gonna touch on this. So it has always been there, and it's always gonna be and it has been relatively high for the most part. But what's the probability of AMC squeezing in June? After all, with the market at an all-time low, it makes you think, why wouldn't shorts close their positions now, right? But most importantly, the executive order 14032 is going to into effect this June. And the catalyst could very well just be AMC's highest probability of squeezing. Now let's talk about it. Okay. The markets are at an all-time low, right? And then more market value has been lost today than in the dot-com crash, right? So the dot-com crash saw a loss of 4.6 trillion. Today, the Nasdaq's decline had a whopping 7.6 trillion. To put things into perspective, the global financial crisis lost 2.3 trillion, and the COVID sell-off lost 4.4 trillion in value. Hedge funds have over-leveraged their positions in heavily shorted stocks such as AMC and GameStop, right? And it's the same hedge funds too that did it on both stocks, right? So retail investors caused Citadel and other short sellers to lose billions last year due to run-ups. Both AMC and GameStop have high short interest above 21% each, and an all-time high number of shares on loan that need to be returned, right? And that's what's going to make the price go up, guys, when they start returning these shares, right, that they borrowed. So short sellers are in a tough position, especially those who over-leverage their positions. The bear market could provide short sellers with an incentive to close the large short positions before the market begins to reverse. The S&P 500 has touched 400 per share several times in the last 5 trading periods. While it has traded below 400, the most important note that markets have a bottom at some point, right? The question is this the bottom? And if it is, will short sellers take the opportunity to close out the positions in AMC and GameStop? So Executive Order 14032 is right around the corner. This is the most important information, right? So pay attention. If you haven't heard of this order yet, you're missing some incredible information here. The order was previously responsible for prohibiting institutions from using Chinese securities as collateral on January 27th and May 27th of 2021, right? So remember those dates. Why are they important? These are the dates before AMC began to run up to $20 per share in late January, and when it began to run to 72 at the end of May, early June, right? So is history going to repeat itself? Institutions were giving the collateral back for 365 days on June 2nd of last year, right? So since then, AMC and the entire markets have gone down. The grace period will be over on June 2nd, 2022, where institutions will no longer be able to use these Chinese securities as collateral, resulting in margin calls, right? That's the theory right now. The difference this time, however, is that the number of Chinese securities affected has increased from 30 companies to 70 companies, right? So last year it was 30 before they pushed it another year. Now it's 70 companies that they can no longer use as collateral. Margin calls could be significantly larger than the previous 2 times based on portfolio holdings. Incredibly, both AMC and GameStop short sellers are more in debt now than they have been in January and June of last year. The amount of FTDs on loan have snowballed to new heights for over a year now, right? So is it guaranteed in June? No, nothing is really truly ever guaranteed in the markets, but the probability is super high, guys. All right, so coincidentally, right, last year, the Chinese collateral was removed during these two run-ups, and now it's happening again, all right? So that's why everyone's hyped. That's why everyone's got their, tits jacked. We all ready, okay? So I needed to show you that. Looks like, or GME is doing pretty good after hours. It also went from 93 to 102 was the high today. So a lot of green and a lot of, upside, up 9% for the day. Finally see that 100, it closed at $100.15, right above. Finally closed, although the RSI is high. So you could see a little pullback, guys, before it starts making another run up, okay? And yes, I do own GME now as well, right? Dang, look at this flash crash. What the heck was that? So this is the SPY. Oh, this is a 2-minute. Let's see. Let's go to the daily. Or no, let's go back to the 2-minute. Just see what happened today. Yeah, I mean, it was pretty flat. So it didn't really help or hurt AMC or GameStop today, right? But it was, based on what Jerome Powell said. The market liked what he said today. They were actually, sorry, let me check something. All right, cool. So they were, the market liked what Jerome Powell had to say, and I think it's because they said they're going to stick to the plan. If they need to raise interest rates, they're going to do it, right, as we go on. And then, okay, so this is AMC. We finally got the new FTD information. Now tell me why there is always, like, days like this, like a million fails, a million shares, guys, right, that have failed to deliver on the 19th. Now let's go back to the 19th on AMC, right? So what happened on the 19th? This is strange, right? So on the 19th was one of the only green days out of like this big section, right? Like very few green days in this whole section right here, right? And then specifically on the 19th, when we have a green day, right, is what I want to point out first, is that we have a million shares that had problems, more than a million right there, right? So it's worth $19 million. Okay. Now there's always tons of FTDs, right? Hundreds of thousands, right? Now let's go over to Cinemark, right? This is a competitor of AMC, right? Let's go look. When do they have this many? So 237 was the peak, but mostly low. Look, 13, 38, 38, 8,000, 19. Nothing compared to what AMC goes through, right? So how come you can go check, BBIG, you can go check, GME. Let's go see GME actually. Why is it that when with these stocks that retail is really, really interested in, right, you start to see the thousands, 33,000, 37,000, 57,000, right? So that's for GameStop. Why is it? Answer me that. Like, why? Right? Always having issues with that, right? Okay. So we've talked about it before. It's just, we always want to keep our eye on the ball and, always keep our head in the game. Because like I said, I'm going to wrap this up, guys. But in my opinion, the DD is never done, right? That's why I named my channel this, because there's always some new information you can find, right? And you got to stay in tune with the markets in order to understand like how they move, where they're potentially going to move to, right? All that stuff. So that's why I like to keep you guys informed. Thank y'all. I love y'all. Hopefully we see the MOAS soon, right? In my opinion, we are just like so close, guys. Maybe in June, who knows? Hopefully, right, we see some action. All right, guys. So keep your head in the game. Catch you guys mañana. Peace.